Good morning. It's Sunday, August 16th, 2026, and we are recapping Friday's US sessions, which which finished slightly lower on a mixed tape. A broad market pulled down mostly by a handful of very large single names in tech and pharma, and lifted underneath by energy in the memory chip complex. This was a narrow move, not a broad one. The six sectors closed higher, five closed lower. And the day's story really lived at the individual stock level. One big red pin is broadband, another one is LA Lali, one big green one is AMD, and the memory chip supercycle reignited is SNDK, WGC, and MU. Let's walk through it sector by sector, starting with technology, the biggest sector at $28 trillion, which also lagged on the day, down 55 basis points or 134 billion. The story here is software infrastructure off by 123 basis points or $75 billion on a $6 trillion cap. Damage came from Oracle, which was down almost 4% after a 6-month delay to the Trans-Western gas pipeline that was supposed to power its New Mexico AI data center complex, and from Palantir, about 3% down on a valuation-driven pullback after a big recent run. Semiconductor equipment and materials cracked down too, 250 basis point down on a $1.3 trillion cap, with Applied Materials as a story, which was down 5% in a classic sell the news reaction to a strong Q3 print. The bright spot inside tech was computer hardware, up 140 basis points, powered by SanDisk's 740 basis points, rip after a very bullish investor day, and Western Digital tagging along at 4% in pure sympathy. Turning to communication services at $12 trillion, essentially flat, just the entertainment did most of the heavy lifting on the upside, adding about 1% on a 920 basis cap, and was almost entirely a Disney and Fox story. Disney climbed 2% on the follow-through from a fiscal Q3 beat and buzz around the freshly dropped Avengers Doomsday trailer. Fox jumped over 5% on both share classes after JP Morgan upgraded to overweight with $82 on the target. On the other side of the sector, internet content and information eased down 20 basis points, with Meta doing the actual damage, down 90 basis points with a $13 billion move, while Alphabet just drifted low on residual profit taking. Moving to financials at $11.2 trillion, slipped 25 basis points. The story here was asset management, down 150 basis points on a $1.2 trillion cap, as the alternative asset complex sold off hard on private credit jitter. Blackstone tumbled around 4% down. Brookfield Asset Management fell 3% down. Ayers dropped almost 4%. All of the same theme. On the other side of the sector, banks diversified actually rose 30 basis points, with Bank of America, Wells Fargo, and Citigroup all posting gains on soft PPI cooling rate concerns. Meanwhile, in industrials, which is at around $9 trillion, stood out as a bright spot, 20% basis points up. Overall, engineering and construction rallied 2%. On the iBauer build-out narrative, Quanta Service rose 2% after City lifted its target to $870. Rental and lease services also picked up 2%, which was led by United Rentals at 3% up. On the flip side, railroads eased 75 basis points down, with Union Pacific down 140 basis points. On lingering regulatory overhang from the Norfolk Southern merger, $85 billion overall worth. Elsewhere in consumer cyclicals at $8 trillion, shed 25 basis points. Auto manufacturers were a bright spot at around 70 basis points up, with Tesla adding 70 basis points on a TD cow buy reiteration and a $460 target. But internet retail dragged the sector down overall 90 basis points down. That was mostly entirely Amazon, which fell 1% or $25.7 billion. A move based on Twitch privacy fallout and soft July retail sales. Further down the list, healthcare at a $7.5 trillion weighted on the market, down 50 basis points. This was the Eli Lilly story. Lilly dropped 2.5% for a $27 billion move on a renewed Trump pharma tariff threat, plus an ex-dividend day. Drug manufacturers, general, overall shed 1% on a 3 trillion cap. The offset here was healthcare plans, notched a gain of 20 basis points, with CVS up 2.5%, and United Health rising about 70 basis points despite a fresh investor lawsuit. In consumer defensive, at around $4 trillion, it was essentially unchanged. Tobacco was the story of the small day for staples. It added about 1% as PM ticked. Philip Morris ticked 1%. Discount stores eased 30 pips down, with Walmart down 0.5% ahead of its earnings on August 20th. Now to energy at $3.2 trillion. The leader on the day was at 1.5%. This was the story of the session on the upside. Oil and gas midstream powered the rally, up 2.5% on a $760 billion cap, with William Cause advancing 3% on a credit-of 5.5 momentum midstream close and a raised EBITDA guide. Oil and gas equipment services rallied even harder at 3%, with Schlumberger SLB gaining 3%, and oil and gas E&P rose almost 2%, with ConocoPhillips up almost 2%. Real estate at 1.8 trillion, which picked up 20 basis points. The AI data center tailwind. Again, here specialty gained 1.2%. Equinix, the data center landlord, jumped almost 3% on the other side. Industrials was off 60 basis points, with Prologis edging lower on the rising treasury yields, weighing on rate cap math. Utilities at almost 1.5 trillion or above 1.5 trillion, up 50 basis points. The bright spot utilities, independent power procedures up at 1.6%, with Constellation Energy jumping 1.4% on ongoing AI power demand. Utilities regulated electricity was more subdued, up 40 basis points, and PG&E rising 2%. And finally, basic materials at 1.5 trillion, the smallest sector by a cap, but a solid gainer at 50 basis points. This was almost entirely a gold story. Gold rose 2.5% on a 230 billion cap, with Newmont advancing 3% as spot gold held above 4.4 1,000 ounce on the ounce on softening July CPI. The offset was copper, was down close to 1%, with Southern Copper slipping 1.6% on profit taking, even as the underlying copper price held nearly a record at $14,000 per MT. That is the sector picture. The outliers, just a quick one. The biggest dollar moves on the upside, the top single mover was AMD, up 6.5%, 451 billion, on a 4.7 billion investment graded debt rise on a Bank of America note rising at 2030 server CPU market forecast above 210 billion. Micron came next, climbing 2.5% for 25 billion after Citi placed it on an upside catalyst watch list, citing tightening DRAM supply. SanDisk rallied 7% for 17 billion on its investor day. Apple ticked up 20 basis points on 10 billion on incremental Texas manufacturing headlines. Tesla added 10 billion on that TD common call, and GE Aerospace climbed 2% for 8 billion in a continuation of its post Q2 rally. On the downside, Broadcom was the story of the day, of down 6% almost, or 120 billion, the single largest dollar move in either direction. Bank of America warned that about 370 billion in AI-related debt across hyperscalers and a critical VMware flu being actively exploited. Eli Lilly gave up 27 billion on pharma tariff threats, essentially tied with Amazon, which shed 27 billion on the Twitch and retail. Sales pressure. Applied Materials tumbled 22 billion on its sell the newsprint. SpaceX fell 1% for 17 billion on share dilution overhang from the 60 billion Anysphere stock deal closing. And Oracle rounded out the list of 4% for 16 billion on the pipeline delay. The biggest percentage movers, definitely Eton Pharmaceuticals, ripped 45% up. HeartFlow, the cardiac image name, jumped 35%. Evolution Metals and Technologies rose 34%. And Unusual Machines advanced 25%. LifePath Technologies rounded up at 15%. On the downside, among the same cohort, ADI Global Distribution tumbled 17%. Biotech in Biosense fell 9%. Dillard's, the department store chain, dropped 8%. OrtaClean Holding shed 8%. And Duolingo, the language learning app, retreated 7%. Big single-day moves like these almost always trace back to specific news, earnings, a broker deal, regulatory decisions, a change in guidance. They're worth watching, not as a reason to trade, but because they often point to a story that is about to matter for a whole industry. This was a narrow day, driven by a few large stories rather than a broader tape. The AI trade cracked at the top. Broadcom, AMD, Oracle, Palantir all shed billions of hyperscaler anxiety, while the memory chip supercycle and SanDisk, WDC, and MU, plus AMD's balance sheet raise pulled hard in the opposite direction. Underneath all of that, energy quietly did the heavy lifting on gold, midstream, and oil services, and healthcare was where the tape hurt the most, as Eli Lilly took a full 27 billion off the board on pharma tariff jitters. On a day when 6 sectors finished green, the market still closed lower. That tells you that the story lived in a handful on the very largest names. Thanks for watching.